Imagine thinking you're completely protected, only to discover, in the worst possible moment, that your insurance won't cover you. It sounds unthinkable, but it's happening more than you realize. In the past year alone, thousands of policyholders across the globe have had claims denied or delayed because their insurers suddenly tightened rules, changed terms, or simply couldn't keep up with the rising costs of claims. And it's not just rare cases. Experts warn that the insurance industry is facing pressures that could reshape the way protection works for everyone, quietly and without headlines. For decades, most of us believed insurance was a safety net. You pay your premiums, and when disaster strikes, you're covered. But what if that net is full of holes? Families are being blindsided when homes flood, health crises hit, or cars are totaled, and the support they thought they could rely on isn't there. Imagine losing everything, thinking you were safe, and realizing your policy doesn't protect you the way it promised. This is no longer a distant "what if?" It's becoming a daily reality for ordinary people, just like you. The truth is, the insurance world is changing, and most of us don't even see it coming. Rising natural disasters, shifting economic pressures, and hidden policy exclusions are creating a storm of risk that affects anyone with coverage. This crisis isn't being reported in the news, but it directly impacts your finances, your family, and your future. In this video, we'll uncover exactly what's happening behind the scenes in the insurance industry, why premiums are rising, and most importantly, how you can protect yourself before it's too late. By the end, you'll know the steps that can safeguard your coverage, preserve your assets, and give you the peace of mind you deserve. Because waiting could cost far more than you think. What's causing the crisis? To understand why the insurance world is under unprecedented pressure, we need to look at several forces colliding at the same time. First, the economy itself is creating strain. Inflation has pushed the cost of claims higher across the board. Everything from repairing homes to medical procedures is more expensive than ever. Interest rates, which have risen sharply in the past few years, also affect insurers. Many companies hold large portfolios of bonds and long-term investments purchased when rates were low. As rates increase, the value of these assets drops, leaving insurers with less financial cushion to cover claims. Simply put, the money insurers relied on to balance risk is not as strong as it used to be. Then there's the growing impact of climate change. Natural disasters, hurricanes, wildfires, floods, are happening more frequently and with greater intensity. A single catastrophic event can cost insurers billions, forcing them to raise premiums, limit coverage, or even pull out of high-risk areas entirely. For example, in the United States, hurricane claims reached over $50 billion in 2022 alone. Worldwide, insurers are increasingly facing losses that exceed what traditional models had predicted just a decade ago. Health and longevity trends add another layer of complexity. Rising medical costs, the lingering effects of pandemics, and the growing number of people living longer all mean more claims for health and life insurance companies. What used to be predictable has become increasingly uncertain, and insurers are responding by tightening policies or increasing premiums. Speaking of tightening, policy restrictions are becoming more common. Insurers are reducing coverage limits, adding exclusions for high-risk events, and delaying payouts to protect themselves. It's not that they want to leave customers unprotected. It's that the financial pressures are forcing them to limit exposure wherever possible. Finally, the insurance industry itself is consolidating. Fewer large companies control a bigger share of the market, which reduces competition. When there's less competition, consumers have fewer choices, making it easier for premiums to rise and coverage to shrink without notice. All of these factors combine to create a perfect storm: rising costs, increasing risks, tighter policies, and less competition. It's no longer just a matter of paying your premiums and hoping for the best. The insurance landscape is changing beneath our feet, and those who understand it early have a crucial advantage. By connecting these economic, environmental, and structural pressures, it becomes clear why the industry is under strain and why the safety net we've relied on for decades is no longer as secure as we thought. How it affects you and what's at risk. Now that we understand why the insurance industry is under pressure, let's talk about what this really means for you and your family. The first issue is coverage gaps. Many people believe that paying their premiums guarantees protection, but that isn't always the case anymore. Policies are being rewritten with exclusions that remove coverage for certain events, or limits that are far lower than what a real disaster could cost. For example, some homeowners have discovered their flood insurance doesn't cover newer types of flooding, leaving them responsible for thousands of dollars in damages. Next, consider rising premiums. Inflation and increased claim costs are being passed directly to consumers. Ordinary families who once comfortably managed their insurance payments may now find themselves priced out of essential coverage. Health insurance premiums are rising faster than wages in many countries, forcing difficult choices: pay the bills or reduce coverage, and risk going unprotected. This isn't just about money, it's about security. Then there's the reality of delays or denied claims. Even when you think you're covered, insurers can postpone payouts or reject claims for reasons buried in the fine print. Imagine having a house fire or a medical emergency and expecting support, only to find out your claim is denied or dragged out for months. These situations create enormous financial stress and can devastate families who counted on that safety net. The consequences are both short-term and long-term. In the short term, unexpected costs can drain savings, force debt, or even lead to bankruptcy. Over time, a pattern of rising premiums and restricted coverage can make it nearly impossible to protect yourself and your loved ones against future risks. Children's education, retirement plans, and everyday stability can all be affected. Emotionally, the impact is profound. The stress of knowing that the protection you paid for might fail when you need it most can weigh heavily. Families live with constant uncertainty, worried that a single accident, illness, or disaster could undo years of hard work. Peace of mind, the primary reason anyone buys insurance, is slipping away for many, even when they believe they are fully covered. This is why acting early matters. Understanding your policies, identifying gaps, and planning ahead isn't just smart, it's essential. The insurance world is no longer predictable, and relying on outdated assumptions could cost you far more than you think. By recognizing the risks today, you can take steps to protect yourself, safeguard your family, and avoid becoming another cautionary tale. How to protect yourself? Now that you understand the risks, the next question is, what can you actually do to protect yourself? The good news is that there are clear, practical steps you can take to safeguard your family, your finances, and your peace of mind. Acting early can make all the difference. Step 1. Audit your policies. This is the most important action you can take right now. Don't assume you know what your insurance covers. Read your policies carefully, line by line. Look for limits, exclusions, and conditions that could leave you exposed. For example, many homeowners assume their standard policy covers flood or earthquake damage, only to find out these require separate coverage. Health insurance policies often have caveats around pre-existing conditions, hospital networks, or treatment types. Knowing exactly where you're covered and where you're not gives you the power to make informed decisions. Step 2. Diversify your coverage. Relying on a single insurer or policy type is risky in today's market. Consider spreading your protection across multiple providers or different forms of insurance. For instance, pairing a standard home insurance policy with specialized flood or fire coverage can provide better protection. Similarly, combining health insurance with supplemental plans for critical illnesses or long-term care can reduce the chance of being caught off guard. Diversification isn't just a financial principle, it's a safety principle. Step 3. Understand policy limits and exclusions. Even policies that look comprehensive can have hidden limitations. Ask questions. How much will the insurer actually pay if a claim is filed? Are there deductibles that could leave you responsible for thousands of dollars? Are certain types of events excluded entirely? For example, some auto policies exclude certain natural disasters or non-standard uses of your vehicle. Taking the time to fully understand these details ensures there are no surprises when you need coverage most. Step 4. Stay updated. The insurance landscape is shifting rapidly. Follow industry news, insurer announcements, and government advisories. Rates can rise, coverage can change, and some companies may even withdraw from high-risk markets. Staying informed allows you to act quickly, renew, switch providers, or adjust your policies before it's too late. Knowledge is power, and in this case, it's protection. Step 5. Explore alternatives. Traditional insurance isn't the only way to safeguard yourself. High-deductible plans, self-insurance strategies, or investing in assets that can serve as financial protection are all options. For instance, some families maintain emergency funds equal to 6 to 12 months of living expenses, providing a buffer if insurance falls short. Others invest in physical assets like gold or real estate that can preserve wealth in uncertain times. Combining these strategies with traditional coverage creates a more resilient safety net. Consider real examples. Families who reviewed their policies before a major hurricane were able to secure additional coverage in time, avoiding tens of thousands of dollars in out-of-pocket losses. Individuals who diversified their health and life insurance plans navigated medical emergencies without financial ruin. These aren't rare cases. They're the result of proactive, informed planning. The key takeaway: you don't have to be a victim of the system. By auditing your policies, diversifying coverage, understanding limits, staying informed, and exploring alternatives, you can take control of your protection. Waiting until disaster strikes is too late. Every step you take now reduces risk, strengthens your safety net, and ensures that when the unexpected happens, you're prepared, not powerless. Protection isn't about luck, it's about preparation. And in the face of this growing insurance crisis, preparation is everything. As we wrap up, let's take a moment to recap the situation. The insurance industry is facing a perfect storm: rising premiums, coverage gaps, delayed or denied claims, and growing financial strain on insurers. Natural disasters are more frequent, health costs are skyrocketing, and policy limits are tightening. For ordinary families, this means the safety net many of us counted on is no longer guaranteed. If you haven't taken steps to understand your coverage or adapt to these changes, you could be vulnerable to financial loss when disaster strikes. The most important message is this: acting now is critical. Waiting until a crisis hits isn't just risky, it could be catastrophic. Insurance isn't like other financial products you can ignore for years. The policies you have today may not protect you tomorrow. That's why preparation and proactive management are the keys to staying safe. Here's a step-by-step roadmap to take control of your protection. First, review your policies in detail. Know exactly what is covered, what is excluded, and what your limits are. Second, diversify your coverage. Don't rely on a single provider or a single policy. Spread your protection across multiple forms and providers where possible. Third, strengthen your safety net by exploring supplemental insurance, high-deductible strategies, or financial buffers like emergency funds or liquid investments. Fourth, stay informed. Track insurer announcements, market shifts, and global risks that could affect your coverage. Knowledge allows you to act quickly and decisively. Looking ahead, the insurance landscape is likely to continue evolving over the next 2 to 5 years. We may see more consolidation in the market, stricter policies, higher premiums, and increasingly targeted coverage. Climate risks, global health trends, and economic pressures will continue to shape the industry. Those who anticipate these changes and adjust proactively will be the ones who avoid financial pitfalls and protect their families effectively. The takeaway is clear. You have the power to act before it's too late. Preparation, knowledge, and decisive action are your strongest tools against this growing insurance crisis. Don't wait for headlines or personal loss to push you into action. Start today. Audit your policies, diversify your coverage, strengthen your financial buffers, and stay informed. Every step you take now is an investment in your security, peace of mind, and the protection of those you love most. Remember, in times of uncertainty, preparation is everything. The insurance world is changing, and risk is no longer theoretical. It's real and growing. By taking control today, you ensure that when challenges arise, you're not a victim. You're protected, empowered, and ready. The question isn't if change will come. It's whether you will be prepared when it does. Make the choice to act now, because your future self will thank you.